Hello, welcome to today's lecture. Uh, Today's lecture is about introduction to accounting for exchange difference. As we know, almost all the organizations now deal with or corporations or organizations from different countries, or uh, one organization has its business in different countries, and that's why they need to deal with different currencies. But ultimately, they have to prepare financial statement for the parent company or the whole company altogether. So, this chapter, we will look at how these issues would be recorded in the financial statements. The main purpose, the main purpose of this chapter is to explain the accounting issues that an organization can face in preparing financial statement. As I mentioned before, the organization which operates is in its business in different countries, dealing with different currencies, maybe by themselves or through a branch or subsidiary companies. How they would record these currencies in their financial statement. That's the main issues. That are the main issues that we will discuss in this chapter today. So the objectives that we will achieve from our today's discussion is the account for foreign transactions, right, where the differences arise on actual cash flows and inflows and outflows. Because of the foreign exchange transactions and recording in their books of accounts, there may be a difference, like because of the exchange rate differences. So, how would we record those losses and gains arising or arised from foreign currency transaction differences? And also, as a parent company, they have to record all the transactions in their parent company's account. So the transactions that happen in different subsidiaries are also being translated, right, to be recorded in the parent company's accounts. So how we would record that and what the difference arise should be recorded as um, against their comprehensive income. So either as loss or profit. And also, in case of recording different currencies in the books of accounts of subsidiaries and also parent companies, there may be uh, this transaction can be recorded in either in functional currency or presentation currency. And in some cases, the functional currency and the presentation currency can be same, and but in some cases it could be different. And we will see what are those criteria that make the differences. And also preparation of consolidated financial statement, how to prepare consolidated financial statement, and the details of those we will see in our seminar or the seminar slide that I will upload day after tomorrow. And also, the exchange rate differences, right, are significantly impacted due to the rate of inflation. Right, if the inflation rate is high, then the exchange rate differences would be higher. So the inflation rate, if the inflation rate is really high, in that case, that economy is being recognized as hyperinflationary economy. So we will know from this chapter that what does hyperinflationary economy mean, and how the financial statement can be impacted because of inflationary situation. So finally, this chapters actually covers all the transactions or the topics that is being covered in this lecture today is recording foreign currency transactions and dealing with functional and presentation currencies according to International Accounting Standard 21, and translating functional currencies into presentation currency, preparation of consolidated financial statements, and reporting financial statements in hyperinflationary economy. So, in case of recording the currencies or the amounts, right, or preparing financial statement of the parent company and the subsidiaries or the branches, organization may need to convert the currencies and also may need to translate the financial statement. So what does conversion mean? So if an organization purchase or sales or make any transaction with different organization from different countries, they need to convert the foreign currency to local currency or presentation currency to prepare their financial statements. Right. So, for example, a British company is dealing with a company in USA, right? Purchased some products or sold some products in, obviously should be in US dollars, right? So in case of recording in the financial statement, the company will record those amounts in British pound. So they have to convert US currencies, US dollars to British currency, the British pound. But what's translation? Translation means if a British company has a branch in USA, right? So the branch in USA or subsidiary in USA, they will prepare a report as well. And that report, those assets and liabilities or financial figures are supposed to be recorded in parent company, that is British company's financial statement as well. So in that case, the financial statement of the branch and subsidiary of USA should be translated into British pounds, right? So that is actually translation. So the conversion can happen. What are the examples? What are the situation or context where the conversion can happen? So foreign currency transaction that should be converted into local currency or presentation currency, right? So in case of buying and selling of goods or services that is denominated in foreign currency, borrowing or lending of fund that is denominated in foreign currency, or buying and selling of assets, right, with an organization situated in different country dealing with different currencies, or and also or and in case of incurring or settling of liabilities that is denominated in another currency or foreign currency, right, that should be converted. These are the aspects or the issues that should be converted into local currency. In case of functional currency, how can we determine functional currency? What is functional currency? The functional currency is actually the local currency in which the branch or subsidiary is dealing with or making its transaction in its day-to-day transactions, day-to-day operations. Right? The currency of the primary economic environment in which the entity operates. That means, right, that means the factors that we need to consider, that the currency that influences the sales prices of the goods and services are functional currency, or and the aspects relating to labor, material, and other cost of goods and services, right, day-to-day operations, when they pay their labor, when they pay for their materials or other supplies, right, the amount should be recorded in functional currency of the branch or. And also the functional currency records can be in case of the currency in which funds from financing activities are generated. Okay, so the if the branch or the subsidiary get fundings or get any or borrowed some money from a local branch, local bank, that should be recorded in the local currency or the functional currency. And also the currency in which the receipts from operating activities are usually retained, right? So whatever they receive from this by providing services to the customer, by selling their products to the customer, what money they receive, the money they retained, right, should be recorded in functional currency. So the functional currency of the branch or subsidiary and the presentation currency of the parent company can be same or can be different. right? So it depends on some factors. Okay, so what are the factors? Okay, whether the presentation currency and the functional currency are same or different. Okay, depend on are the activities of the foreign operations carried out as an extension of the reporting entity, or rather than being carried out with a significant degree of autonomy. Okay, if it is a if it is just an extension, it should be same functional currency. If it is significant different, right, in that case it should be different. Okay, are the transaction with operating entity a high or low proportion of the foreign operations activities? So the foreign operations activities, if it is high, okay, in that case it can be different. But if it is low, right, it's just a simple extension, low transactions, right, of the foreign branch or subsidiary. In that case, it should be um, it should be same. And also cash flows from activities, right? Do the cash flows of activities that receives from the operations of the foreign operations directly affect the cash flows of the reporting entity? If it is a significant amount that receive, and the amount that receive is straight away transmit to or to the parent company, right? In that case, it could be the same. It could be the same functional currency, but if it is not readily available to transmit to the parent company or reporting company, in that case, it could be different. Okay, are the cash flows from activities of the foreign operations sufficient to service of existing and normally expected debt obligation? So if the subsidiary or the branch is independent, kind of, right, or they can discharge their debt or their of their liabilities, in that case it should be if they're enough, if they're sufficient, if they're independent, in that case it can be different. But if it is not, if the branch need help from parent company, support from parent company, in that case it could be same. If they need support, if they're dependent on the parent company or reporting company, it could be same. Otherwise, if it is enough, sufficient, if the branch is independent, sufficient fund they have to discharge their own obligations, in that case it could be different. Presentation currency, the presentation currency is the currency that the reporting entity, that is the parent company, uses, right, parent company uses as their currency in their financial statements. So that is their presentation currency, right? So in that case, the reporting entity or the parent company can use any currency. They have they have the right to use any currency as their reporting currency or presentation currency. But when it can be same and what it is different, we have already identified. So in some cases it can be same, but in some cases it could be different. As we mentioned before, hyperinflationary economy is closely related to the exchange rate. Okay, so exchange rate actually significantly differs because of the inflation rate. So what makes the what is the hyperinflation economy? When we can recognize that the economy is hyperinflationary, though there is no precise um, criteria, but there are some issues that we can discuss. But one of the number that we can consider is if 3 years inflation rate, right, total of 3 years inflation rate exceeds 100%, which is really huge, right? In that case, the economy is hyperinflationary. But some other cases also we can consider um, that the economy is hyperinflationary. For example, if general people don't like to hold money in their hand, but they like to invest their money in non-monetary assets, right? Right. In that case, or in relation to other foreign currency, you want to deposit your money in USA or Switzerland because the maybe because of that currency is not fluctuating too much, right? In that case, you can say this that the economy is hyperinflation. You don't like to retain your money in your hand, right? You want to transfer in another country because that currency is stable, or you want to invest your money in real asset, right? Or kind of fixed asset. In that case, you can say your economy is hyperinflationary. The general population regarding the monetary amount that don't recognize their currency, right? Whenever they compare, they say, right, they recognize their money, right? Compare their money in relation to a stable foreign currency. In that case, you can recognize that the economy is hyperinflationary. Sales and purchases, when the companies make sales and purchase transactions in that own account, on credit, in that case, the credit period is being considered significant time, and that time is being recognized, right? In determining the sales price and purchase price, right? In that case, it is hyperinflationary economy. And also, interest rate, wages, and prices are being considered, are being determined based on a price index, based on inflation rate. If it is the case, then it is hyperinflationary economy. As we mentioned before, right? 3 years, total of 3 years um, inflation rate, if it exceeds 100%, then it is hyperinflationary economy. So in case of converting to foreign currency into presentation currency, local currency, what the rate we should consider, what the rule for that, what are the rules? Okay, so in case of monetary items, right, if anything happened, if any transaction happened because of in relation to monetary items, like account receivable, accounts payable, loan account, okay, so something like this, in that case, the closing balance, closing rate, year-end rate should be considered as the rate of transaction, rate of conversion. In case of non-monetary items, right, the rate at the date of transaction should be considered as conversion rate. In case of revaluation, right, if any asset is being revalued on a particular day, right, in that case, that the rate on that day, or the currency rate on that day should be considered as the conversion rate. So the examples, couple of examples, I already mentioned a couple of examples, monetary and non-monetary items. So monetary items, as I said, account receivables, accounts payables, loan creditors, right? So these are monetary items. If any transaction happened between two organizations in relation to account receivable and accounts payable, in that case, they should consider uh, settlement, right? So the balance should be considered, right? The balance amount should be recorded as year-end balance, and if any transaction or settlement happened at the settlement date amount. In case of monetary items, or in case of monetary items or non-monetary items, in case of non-monetary items, that is fixed asset or inventories or purchase of any assets or liability, any purchase and sales of any assets or any inventory should be recognized as non-monetary transaction, right? And those should be recorded as based on the rate of the date of transaction. The rate on the date of transaction should be considered. Translation, in case of translation, right, if the figure is translated between the parent company and the subsidiary company, right, or the branch and the parent company, in that case, the transactions, if it creates any profits or losses because of this transaction, right, exchange differences should be recognized as realized profit or realized loss. Right? In case of you could remember, hopefully, in case of consolidated financial statement, in case of joint ventures, what we did, the transaction between parent company and subsidiary company if the product still in stock is unsold, should be recognized as unrealized profit. But in this case, the foreign currency transaction, if any profits or loss happen, that should be recognized as realized profit or realized loss. So in case of disclosure, if an organization uh, use exchange rate or deals with exchange differences, they should record in their books of accounts. But how? What is the basis of the rates? What are the facts that should disclose in their annual reports? They should disclose some information in their annual report. So what are the facts? What are the issues the reporting company, the parent company, should disclose? The fact that the financial statement and the corresponding figures for previous years. So the financial statement of the current year, that should represent based on the current year rate, and also the financial statement of the figures of the previous year should be restated according to the current year's figures. Okay, so all the annual reports, if you say, it contains 2 years figures. So 2 years figures should be reflected or restated in the financial statement according to the current year's rate. And also, they should make it clear in their financial statement, in their annual report, in their notes, that the financial statement has been prepared based on historical cost or current cost. So which approach they followed? If the financial statement is prepared based on historical cost, that is the original transaction happened. When the transaction happened, so 2 years before you purchased an asset, and you are recording the assets at its original price, original cost, that is historical cost. But if you record your assets and liabilities or other transaction according to the current purchasing power accounting, current cost accounting, or fair value accounting, okay, so in that case you have to disclose in your report that you considered current cost accounting. So in case of current cost accounting, if you consider fair value accounting, which price index or inflation index you have used in converting your historical cost or last year's figure, right, to the current year's figure, to the current figure, right, fair value, that should be disclosed as well. That this is what the index I have used. And what is the index at the end of the accounting period? What was the index last year? And what is the movement of the index? Right? That should be clearly mentioned in the notes section after preparing your financial statement. Let's see an example. How the transaction is being recorded in the books of accounts, how the figures are being converted to the presentation currency or local currency of the reporting entity, and how the gain and losses of the foreign currency transaction is being recognized in the books of accounts. Okay, let's assume the following transactions were entered into by Boyle PLC, a UK company that buys and sells catering equipment in New Zealand during the year ended 31st of December 2014. 1st of November, Boyle PLC purchases goods for 30,000 on credit from Napier Limited. 15th of November, sells goods for 40,000 on credit to Wellington Limited. And on 15th of November again, they pays Napier Limited for the purchase before, 30,000 they purchased. Now on 15th of November, they pays 20,000 for the goods purchased. Okay, on 10th of December, received 25,000 from on account from Wellington Limited. So to Wellington Limited, they sold goods for 40,000. Now they are receiving 25,000 for their goods sold on credit. On 10th of December again, buys machinery for 80,000 from Auckland Limited on credit, and 22nd of December pays Auckland Limited 80,000 for the machinery. Boyle's functional currency is obviously it's an UK's company, so the pound sterling is the currency for Boyle's Limited, and New Zealand's company, the functional currency should be New Zealand dollar. The exchange rate at the relevant date are given as below. So the 1st of November, the rate was one pound equal to 2 New Zealand dollars. On 15th of November is 2.2 New Zealand dollars. On 10th of December is 2.40 New Zealand dollars equal to 1 pound. On 22nd of December, 1 pound equal to 2.5 New Zealand dollars, and 31st of December, that's the end of the period, end of accounting period, is 1 pound equal to 2.6. Assume that Boyle PLC buys foreign currency to pay for goods and non-current assets on the day of settlement. So when they settle it, they pay the purchase currency right on the day of settlement, and then pay it and immediately convert into sterling by currency received from sales. So for sales, they immediately convert it into pound sterling. Okay, so let's see how we can convert the foreign currencies to local currencies, and what is the profits and losses or gains and losses. Okay, so Napier, we purchase goods from them, is an account payable, right? We have to pay to them, and Wellington is our receivables because we sold goods to them, and Auckland Limited is our accounts payable because we purchased machinery from them. Okay, so in case of purchase and sales, and also purchase of machinery, these are non-monetary items, right? Should be recorded according to the date of transaction. So on the date of transaction, the rate was 2 New Zealand dollars equal to 1 pound, right? So it should be converted to pound. So 30,000 equal to 15,000 pound. So divide 30,000 by 2, and 40,000 equal to 18,182, and 80,000 is converted to pound is 33,333. Okay, in case of settlement, right, should be recorded at the date of transaction. So on the date of transaction, so we paid 20,000 to Napier, right, out of 30,000. So it's converted to pound as we did before, 20,000 divided by 2.2. 25,000 we received from Wellington because of our goods sold. 40,000 we sold, but 25,000 we received, converted to British pound, and 80,000 we convert to British pound is 32,000. Okay, it's just the full amount settled, right? It's 80,000 and 80,000 is being settled, and then you can see we purchased, according to the British pound, we purchased the machinery for 33,333, but we paid the full amount when we paid the currency value in terms of British pound is 32,000. So there is a savings of 1,333 pound, right? The purchase amount is this, but we paid this, and that's the final amount that we paid. So we don't need to pay 1,333. This is our savings. So this is the gain, all right? And in case of accounts payable, okay, so 30,000 we purchased, 20,000 we paid, 10,000 still remained as balance. And in case of sales, 15,000 still remain as balance. Out of 40,000 we received 25,000, 15,000 is balance. So these balances, closing balances, should be recorded as our should be recorded as the ending balance, and this ending balance should be recorded as uh, uh, according to the ending balance, ending rate. Okay, so this is what is the amount after conversion, and then we can say this is what we are supposed to pay, but this is what we paid, and this is what we are supposed to pay in future. So this is what is our gain because of this purchase transaction. And from the sales transaction, this is what we are supposed to receive, but what we received and what we'll receive in future is much less than what we expected to receive. So this is what is our loss. So this is the amount of gain, and this is the amount of gain from these two transactions, and this is what is the loss because of our foreign exchange difference in relation to sales transaction. All right, so these gains and losses should be recorded as realized profit or realized loss in our financial statements. All right, so these are the couple of review questions that we will discuss in our seminar day after tomorrow. I'll upload slides similar to this day after tomorrow, discussing these questions and also two practical questions. And regarding this lecture, if you run the lecture as slideshow, it should go automatically from the beginning to the end, right? And this is the last lecture of this course. There is no revision because there is no exam of this course. So I enjoy teaching this course. This is a new module that I have developed and mostly practical, as we discussed before. And hope you enjoyed it. And I wish all the best for your career in future. And hopefully, yeah, you'll submit your coursework before 31st of March. And as I said, some feedback hours for you. If you need any help and support, let me know, and I'm available on Thursday for 2 hours for you to giving feedback on your coursework draft. So up to then, stay fine, keep safe, and I'll see you then. And all the best for you. Thank you very much.